Techies and scientists, welcome back to the channel. Another week, another dollar, another week, and prices are going down. The pressure is up. Things are going down. We have gold down, silver down, Bitcoin down, and we have the index going down. Even the dollar retraces a little bit. We have everything on the recipe to go down. Let's discuss it. Let's talk about it. Okay. So this week we had the FOMC. It seems like there was nothing going on. The FOMC was on Wednesday at 2 p.m. and you already know FOMC is a dual trading strategy. But it seems like this Wednesday, not so much. So we had at 2 p.m. It started. Price started going up. We trace a little bit. Then at 2:51, we have price spiked up all the way to 24,691.25, and then it's been down since then. Okay, so it looks like price is going down. Nasdaq is going down as well. It seems like right at around 339, he had a small pullback, a small retracement. And then I think that's it. That's about all it did for today. So let's take a look at it from a daily perspective. So the market is still in range, pretty much still in range since about February 6th. And it looks like today he made an attempt to get out of the range by trading lower than this low here on March 9. And my hypothesis is, if next week open up and price trade significantly lower and close lower, we may see price hedging and going down significantly lower to target this relative equal lows over here. So this is my prognostic. This is my prognostication for next week already. Now at this point, what we're seeing is we saw the high was made on Wednesday, 318. Price opened up on Sunday on the new contract, by the way, on the June contract, and then trade up, and got into this particular area right here, which is, I will say this is rejection block here. And I believe last year when I made my prognostication, it was gonna get as high as this one, but it looks like it got really high, close to 25 to 64, but it did not get there. And then make the high on Wednesday and start going lower and lower from there. So yeah, so that's the price on that. So me looking at this particular season here, the seasonal tendencies, it seems like it's completely shot. Because we have all this conflict going on the other side of the world. This is an unprecedented year. Okay, we have invaded a lot of countries, and we are planning on invading more countries. We are trying to beef. Well, on the appearance, on the surface, it seems like we're trying to have beef with NATO, but it's all a show and charade. They are best friends and best buddies.
Your agreement, no headlines, no press conference, just a decision that will destroy the financial life you've built. The petrodollar just died, and with it, the final pillar holding up American monetary dominance. Right now, $36 trillion in U.S. debt sits like a time bomb. Foreign central banks are dumping treasuries at record speed. China, Russia, India, Brazil. They're not buying dollars anymore. They're building the system that replaces it. Here's what nobody's telling you. This isn't new. This isn't unprecedented. This is a pattern. A cycle that's repeated 3 times in modern history. Spanish real, Dutch guilder, British pound. All reserve currencies, all collapsed. All followed the exact same 4-stage pattern we're watching unfold right now. The average reserve currency lasts 80 to 110 years. The dollar hit 80 years in 2024. We're not approaching the collapse. We're in it. In your savings account, your retirement fund, your dollar-denominated assets, they're about to become artifacts of a system that no longer exists. This is the anatomy of a currency collapse. And you're living through stage 3 right now. Every reserve currency in history follows the same predictable pattern. 4 stages, 4 inevitable phases, no exceptions.
So let's take a look at this one real quick as far as the comparison to the dollar and the Nasdaq. So it seems like on 3/13, March 13, price make a low, trade up high, obviously on the 18 here, and then made a lower low today, closed at least as far as the peak, made a lower low here. If we look at the dollar, it made a high, similarly made a high, but it failed to make a higher high, okay, in comparison. So we have a little bit of SMT divergence here. So we have two particular scenarios that can come out of this starting next week and moving forward. It's either the dollar is going to capitulate and start going lower, and then we may start seeing higher prices moving from there. I mean, especially we saw that here, the final conclusion here, we saw price retrace a little bit and start going higher. So we may see an opportunity where on Sunday price may gap up, open up, trying to clear out those highs here. And if it's really animated, I mean, this area looks really juicy for me right here. We're talking about 24,658. It may start getting there maybe on Tuesday or Wednesday. I'm thinking maybe on Thursday, if not. Depends on how animated it is. I mean, if we have this junk here where the price goes sideways for a long time, then it may eventually get there on Wednesday a little bit higher and then start going lower on Friday precipitously. But with what I'm seeing here, price may gap up, start going higher and higher. So that's one particular scenario that I see for this, okay? And then the dollar will start going lower from there, following that trend. Or the most likely scenario, what I think it is since the Nasdaq made a lower low and it failed to make a lower low, the dollar may try to catch up to it to get to that higher high here, and then we can see a significant meltdown on the Nasdaq. So it may, retrace lower a little bit and then start going higher, and price may eventually go higher on here too as well, as the dollar make a lower leg here, but not lower than this, okay? And then after that, you may see price the Nasdaq significantly melt lower from there. So that's my prognostication for next week. Again, it will be the same scenario here. Try to go higher, to go lower. Now, let's take a look at what we have on the agenda for next week as far as the calendar is concerned. We do see here that next week, not much going on compared to this week. We have the unemployment here claims on Thursdays, but it doesn't matter much because the government shut down and things are delayed anyway. We do have a flash PMI. That will be on Tuesday at 9:45. Not much here. I would watch out here for that crude oil inventory at 10:30 a.m. In the past, it may not has been as much of a concern, but because of the conflict going on the other side of the world, we gotta pay attention to it a little bit and be cautious around 10:30 a.m. on Wednesday. They may try to use this opportunity to move the market around a little bit without even you noticing it. So we have the extreme fear index here on this highest high over there. And talking about crude oil, we saw that it made a spike on March 9th, but since there, it has failed to get higher than that, but it is slowly creeping up and it is stabilizing a little bit. The market is highly manipulated, my man. I mean, at this point, because we have a lot of cushions and a little bit of preparedness for this, so that's why you're not seeing price going higher. But in everywhere else in the market, the physical demand for oil, the price, is significantly higher, and at some point it's gonna catch up and it's just gonna jump up past 120 all the way to 150 if things are going the way they are. Which also explain why gold and silver is going lower, because there's not that much physical demand for gold and silver. So what do you think what's gonna do? People are not delivering the gold is not being delivered physically, the silver is not being delivered, well, not the silver, the gold specifically. So the gold is not being delivered, so you have the price being adjusted to its mean, going lower than anticipated. But Mark my word, that doesn't mean it's gonna keep going lower and lower. At some point, it's gonna reach a level, and it will kind of bounce back up from there. What level? I haven't looked into yet. In my live stream on Wednesday, I will provide a prognostication on how much lower it's going to go. But again, my prediction on gold is usually not very sharp because I don't trade it as much. But one thing I know for sure, I know why it's going lower is because the demand for delivery is not there, and then price is dropping like a rock. And with that being said, silver is also following the same path as gold. So that's why we have that. So we have a little bit of a bounce back on the Bitcoin, and that's because people who live in Saudi Arabia, they're fleeing that area. So they're kind of like pushing and edging their bets on that particular live Bitcoin market. That's just speculation at this point. But that's where we are right now. So that is my prognostication for next week. Just be careful. This next week coming up may not be as volatile as last week, but still watch out, be on the lookout, and trade safely. And we'll talk on Wednesday in our live stream.